Welcome back. I'm Pratap here. Today is 11th September 2024. In this video, let us evaluate the performance of high liquidity zones generated in the previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, you can click on the tab post. Some of you might be seeing a tab called community. So whichever the tab you see, there you please click on the tab. Then you will get access to our free training course. So this post is having a YouTube playlist link that is having all the training videos. You just click on the link. Now we are into the playlist Supply Demand Zone Price Action course. So far we have completed 25 training lessons. From these 25 training lessons, we have released 65 training videos. And you need to start our training from the first video. For that, you need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and then strengthen your skills about supply demand zone price action. I have also provided our Telegram channel link in this video description. So from the video description, please join at our Telegram channel. It will be helpful to you. Each time when we release a new YouTube video or any other important updates, we will be providing at our Telegram channel. Now let's get into the analysis of the high liquidity zones. So yesterday at the end of the report, we have identified 3 high liquidity zones for our today's trading point of view. Out of these 3, 2 stocks we got the trades and 1 stock is not having a fine-tuned 5-minute zone. So let's analyze these 3 stocks. How I did the analysis, let me explain. And also how we got the trades, let me explain. So the first one we got is INDUSTOWER. INDUSTOWER is a daily high liquidity zone. We have a drop candle, 3 base candles and then again a drop candle. This is what identified by our NeoStock software. And this zone we need to fine tune with 5 minutes time frame for planning our intraday trades. Okay, this daily zone I have fine tuned with 75 minutes time frame. So here identified a 75-minute zone, rally, 3 base candles and a drop candle. So this is the 75-minute zone I have drawn. Again inside the 75 we need to fine tune with 15-minute zone. So I am moving to the 15 minutes time frame. See here in the 15 minutes we have a rally candle, 1, 2, 3, 4 base candles and then again a drop candle with hidden body, rally base drop. And again this 15-minute zone we need to fine tune with 5 minutes time frame. See here in the 5 minutes we have a drop candle, we have 2 base candles and then again a drop candle with hidden body, drop base drop. So this is where we need to plan a trade. But here I have drawn another zone. This is not a fine-tuned zone. This is not fine-tuned. Directly we have drawn the 5-minute zone. How I have drawn the 5-minute zone here? So we have a ERC candle as well. Again, you have 1 base, 2, 3 base candles and a drop candle. This is the 5-minute zone. Generally, when you should plan for a 5-minute zone? As an aggressive trade. The 5-minute zone not fine-tuned. See, this one is fine-tuned, but this is not a fine-tuned. And many times such kind of zones will be violated easily. The 5-minute zones that are not fine-tuned, they will be easily violated. But sometimes they work very well. And such kind of time, this kind of trades we named as an aggressive trade. Aggressive zones means the zones are not fine-tuned. So this is not a fine-tuned zone, but it is inside the high liquidity zone. Do not forget. This 5-minute zone is inside the high liquidity zone. And this 5-minute zone is having a strong order flow. But many times these zones will violate. But how can we say this zone is having a strong order flow based on the price action clues? See, today morning, see what happened? Prices reached very near to the zone and then see the rejection. It opened here, prices went up to here, near to the zone. And then a strong rejection. And then see, the next candle, continuation to the rejection, the prices were down. So this candle is an indication that, I repeat, this candle is an indication that this zone is having a strong order flow. You may ask a question, why can't we take a trade here? Because this is a today morning 9:15 candle. 9:15, 5 minutes candle. Let me open the 1 minute candle, you get better clarity. See, this is the 9:15 candle. Continuation to that, this is 9:16 candle. Opened with gap up, further moved up. And then see the rejection. And continuation to that, how the prices were fallen. If we would have added some entry buffer, we would have got a trade, right? So you may ask a question, why we didn't plan a trade? Maybe this could have been another successful trade for us. We cannot plan this trade. The reason is, if you plan this trade, there is no price action clue. Earlier, is there any price action clue? No, there is no price action clue. Without price action clue, you cannot take the trade. Because this price action clue is available, that's why we got a confirmation that this zone is having a strong order flow. But earlier we didn't have a price action clue. Many times what happens, such kind of zones will be violated easily. 5-minute zones which are not fine-tuned, they will violate easily. But this time, this price action clue helped us to understand this zone is having a very strong institutional order flow. That's why next time when prices are entering into this zone, we can plan a trade. When it will enter, maybe today or maybe tomorrow, after some other time. So luckily today, prices entered into the zone and we got a trade opportunity, aggressive trade opportunity. And also remember, this price action clue we got today only. Yesterday, if you would have fine-tuned this zone, yesterday means after market hours, after I released this report, definitely we won't draw this zone. The reason why we won't draw this zone, because yesterday at the time of fine-tuning the zone, this is how your, your chart looks like. And if you draw a 5-minute zone here, there is no price action clue. Let me move on to the 5 minutes time frame. So this was the situation yesterday. So yesterday also you can see, we have this drop, base, drop. But this is not a fine-tuned zone. And no price action clues to confirm this is having a strong institutional order flow. So that's why we don't draw this zone. So this was the picture. This is how we fine-tuned, and we were looking for an order in this fine-tuned area. But today we have drawn this zone after seeing this price action clue again. That's why markets are dynamic. When there are changes are happening in the live market, immediately we should take our actions. See, today morning by seeing this candle and after the price action, after this rejection and continuation to the rejection, the price action, it is confirmed that there is a strong institutional order flow. So immediately you have to draw the zone in the live market. And after that you might have observed prices again nearing to this zone. So once they entered into the zone, we can plan a trade. See how successful it is. Just touched and then again how sharply prices were down. If you look into the 15 minutes candle, you see it just touched and see the rejection, how prices fall down. 75 minutes candle, you clearly see the rejection and continuation to this. Daily candle also you will see. See the rejection and how it fall down. Okay, we got the trade. Then what is the target? Target is very tricky here. Lot of learning is there. All of you please concentrate. We have a 15 minutes zone. We have drop 1, 2, 3, 4, 5, 6 base candles and a rally candle. So this is the way you can draw the zone, 15 minutes. And we have 1:3 RR is available from here to here. And below that there is one more 5-minute zone. We have a rally, base, rally. Rally, base, rally is there. Again drop, base, rally is also there. That means maybe it could be a high liquidity. That's why new zones are getting created. That way you can understand. We don't know. Generally what you do, you will aim immediately available this zone. But if you look into the 5-minute zone, see here, see the structure, sluggish structure here. And you have a drop, 1, 2, 3, 4, 5, 6, 7, 8, 9. All these are all. Moving on, 9 candles moved narrowly within this range. Definitely there are higher chances this zone will be violated. Then we can target for this particular next 15-minute zone. Of course, there is a possibility after prices reaches here, institutions may create maybe a drop-based rally and again they push the prices up. That possibility is also there. Dynamic zone they can create. If that is the case, if you don't book your profit margins, you will be losing. So what is the solution? How to target, how to aim for a more target. For that you already learned the concept, trailing stop loss. You can use a 5-minute trailing stop loss or you can use a 1-minute trailing stop loss. Go to the 1-minute time frame. None of the 1-minute zones are violated. When prices are nearing to this. Look into this. We have a rally base drop. And this zone is respected, rally base drop. That means it picked up the orders and again it came down. And here again you can say drop base drop. So before prices are entering, here you have a drop base drop. So you can keep trailing stop loss in case if this is violated, you want to exit or you want to aim for more profit. Meanwhile, if any new zones are created, you will keep. See here, you have a rally base drop is created. Now you are updating this. This is going to be your new stop loss to book the profit. These stop losses are not for exiting, for not stopped out trades. These stop losses are for booking the profit. So rally base rally. We trailed. See here, earlier this one. Now we have changed. That is what changing means, trailing. We trailed this stop loss to a new. Earlier this one drop base drop. Now this rally base drop. If this is violated, we will exit. Then the profit is almost same as booking the profit in this 15-minute zone. But is it violated? No, it's not violated. Again rally base drop is created here. Very near to the zone. Again drop base drop is created with some hidden body here. Again prices were falling. And here we should be very careful because there is a gap is there from here to here. Who knows? Maybe sometimes there could be a very strong institutional order flow in this gap. So that's why we should be very strictly follow trailing stop loss. But here continuously all drop candles, drop. Here drop base drop. So again you need to draw a zone, drop base drop. If this drop base drop is violated, then you will exit and book the profit. But that didn't happen. Again another drop base drop is created. Now it reached the target. Now you can book the profit. Maybe you may say again, Because already previously this zone is already tested. Let me go to the 5 minutes time frame. This zone is already tested. Prices went more deep. There is a higher chances this zone also will violate and further go down. So why can't we aim for more profit? This is the question you may ask. Obviously, when we did not book a profit here, why should we book the profit here? See, why should we book the profit? I already explained yesterday. We have a 15 minutes zone is here, second zone. We have drop base rally today with pro gap. So by the time the supply would be consumed by the time it reach. Yesterday I explained in yesterday's HLQ analysis. That could be the reason why we should book. Yesterday also exactly based on the condition we booked. Still you feel this is already tested and more deep inside if you think like that. Of course this zone is already, this rally base rally is already tested, but at the time it again created drop base rally. This is behaving like a high liquidity zone. That's why it may not be violated if it is a high liquidity. That possibility. See, all these conditions, based on that you should take a decision. So again you have two options. Option number 1, book the profit here, exit the trade. Option number 2, continue your trailing stop loss, go to the 1 minute time frame. Already you have 1 minute, already you have drop base drop is there. This is the one. Supply zone, drop base drop. Any more further drop base drop 1 minute zones? No. Now this zone is violated here in this candle. If not this candle, this candle. If not this, this. In one of these candles, definitely. Anyway, in this candle it is violated. Immediately you book your profit. Instead of booking your profit in this proximal line, probably you book the profit. Let me draw the horizontal line. Here a little above, maybe you may keep some stop buffers. A little above, maybe somewhere here you would have exited, either in this candle or in this candle. Still you almost get the same profit, maybe a little less, but whatever, if you exit here or exit at the blue color line, there is not much difference in the profit margin. You didn't lose your profit much. Maybe a difference of 500 rupees will be there, not more than that. Compare it to booking at the proximal line of this 15-minute zone. Hope you got the clarity. See, this is the way trailing stop losses will always help in achieving more profit. If you don't use properly, sometimes what will happen, your profit margins also will reduce. Instead of booking the profit here, probably you would have exited here. See how much profit margin you might have lost in case prices reversed from here. There should be some strong justification should be there why we should not book here and why should we further continue. You should not take a blind decision. There should be proper justification should be there. What is the justification I had? Because the zone, 5-minute zone, lot of consolidation took place here. Definitely the order flow in this zone is already weakened. The 5-minute zone is clearly telling drop base rally. There are 9 candles are there. There are higher chances this zone will be violated. That's why we want to depend on the trailing stop loss to book more profit. Why we want to book here? Why we don't want to continue further trailing stop loss? The reason is this zone is acting as a high liquidity. Maybe we are not 100% sure. There is a possibility because in high liquidity zones, LOTL zones will be created. That is what we observed many times. Not always, but majority of the times we observed. That is one reason. Reason number 2, already there was a gap is there in the morning. Because of this gap, any strong order flow in this area, by the time prices reach here, the supply will be consumed. And the demand in this zone again will push the prices up. See, that is what happened. Prices came, here again pushed. There is another reason, drop institutions created drop, base, rally, again here. Next time again, once again this zone will work. Because here we have drop base rally is there from this zone. 15. This 15-minute zone is acting like a high liquidity zone. In the 15-minute zone, a new 5-minute zone is created, a fine-tuned 5-minute zone. This 5-minute zone again next time will be pushing the prices up. That possibility is there. So this is the way Indus from here to this second 15-minute zone. See, where you book the profit is up to you. But how much opportunity our high liquidity zone is given today is let me open Excel sheet. Okay, INDUSTOWER has given 11,050 rupees profit. From here, from this aggressive 5-minute setup to this second 15-minute demand zone, that is target zone, we got 11,050. If you would have booked earlier, your profit will reduce. This is the maximum opportunity what this high liquidity zone has given. The Excel sheet, I am not registering my trades always. Several times I told earlier. Excel sheet, I am registering only the opportunities provided by NeoStock high liquidity zones. And where we are exiting, that is all again depending on our individual trades and our individual psychology. That plays the role. But our high liquidity software has provided this much opportunity. So aggressive trade, price action clue rejection near 5-minute supply zone inside the daily high liquidity zone. So this is an aggressive trade, a successful trade. And when we got the trade at 1 o'clock 25 minutes, 5 minutes candle, we got the trade. And when you would have exited at 2 o'clock 15 minutes, 5 minutes candle. If you go to 1 minute, exit. 2 o'clock 53 minutes, you would have exited. You got the trade in 1 o'clock 27 minutes. Okay, this is about Indus Towers. The next one is again a tricky trade, very tricky trade. CROMPTON. CROMPTON is also having a daily high liquidity demand zone. This is the one, rally, base, rally. See at the hidden body, this is explosive. So this is like a leg out candle. Leg out can be used even as a leg in also. Leg out is qualified as a leg in for the next zone. So this is a leg out, looks like a leg out candle, but there is no zone here. So ERC candle. So ERC candle can be used as a leg in as well as a leg out. The large ERC candle. Medium size ERC candle you can use only for leg in, you cannot use for leg out. But large size ERC candle you can use for leg in as well as leg out. Anyway, here this is large ERC candle is a leg in. After that you have a base candle, another large ERC candle, that is a leg out. So this is what our software identified. Now I have fine-tuned this zone with 75 minutes time frame. I have identified two 75-minute zones. Here we have a drop, base, rally. And then again here, see here, failed ERC candle. It can be used as a leg in. This is a leg in, two base candles and then a rally candle. So this is like a rally, base, rally. So in these two 75-minute zones, again we need to fine tune with 15 minutes time frame. Let me first show you the bottom one. So here we have a rally candle, three base candles and a rally candle. Or you can also draw like this also. Instead of limiting the 15-minute zone as a drop, base, rally. If you convince this is not a drop candle, if you convince this is also a leg candle, then it is a rally, 2, 1, 2, 3, 4, 5 base candles, rally candle. But whatever it is, this is the 15-minute zone. Here drop, base, rally also, this is also you can draw. like this. There is one more, but these are all the LOTL scenarios. Drop base rally also you can draw. Sorry. Let me draw the zone. Like this. This is a 15 minutes demand zone. See, both are LOTL zones. Either way we can draw. But here fine-tune 5 minutes is important. Go to the 5 minutes time frame. So here you have a 5-minute zone, rally, base, rally. You can also draw drop, base, rally, or you can consider this is a rally, 1, 2, 3, 4 base candles, rally candle. That way also we can draw. Anyway, it doesn't make any difference while drawing this 5-minute zone. Even if it is a drop base rally or rally base rally, this 5 minutes demand zone still remains same. If you want to draw week to week, it will be like this. If you draw week to week, this is already picked up the orders from this zone. That means this entire 15-minute zone is created by picking the orders from this 5-minute zone and then created. Probably if that is the case, this 5-minute zone is having a very strong order flow. And apart from that, we have one more zone here. So here we have a 15-minute zone. First let me show you the 15-minute zone. We have a drop base rally. This is the 15. Inside the 75. This 75 is inside the daily. See here. This is the 75. This entire thing is daily. This is the 75. In this 75 we have a drop base rally is there. And here again 5-minute zone. Have fine-tuned the 5-minute zone here. We have a rally, 2 base candles, and then again a rally candle and follow through candles. Excellent. And today we got a trade in this particular zone. After that, this zone is violated. After it gave the trade, that is a different story. But we got a good trade. But it's a tricky trade. Why I am saying tricky trade? We should observe price action. See why price actions are very, very important. This is another good learning you will be having. If you don't follow the price action, today you would have booked a very small profit. See, first of all, existing profit is also small as compared to our 6% intraday ROA. Still, it's a good profit. See, this is the trade we got. Now we got the trade. And when we got the trade, at 2 o'clock we got the trade, afternoon 2 o'clock. I already told you, last 1 hour or 1.5 hour trades don't target for 15-minute zone because we don't have sufficient time. Sometimes it may reach, sometimes it may not reach. The risk will be there. That's why this is the 15 minutes target. Rally, base, drop. Sorry, 5 minutes target. We are in the 5 minutes. This is the 15 minutes target. Let me go to the 15 minutes time frame. See, here we have a rally, base, drop. Or you can also consider this is the drop, these 3 base candles, and this is the drop. That way also. But anyway, it is not easy to reach this 15 minutes in the last 1.5 hour trade. So this is the 15 minutes target. But the problem is, before you fix this target, you should also notice something is preventing here prices go beyond this. Let me draw the horizontal line. Let me go to the 1 minute time frame. You will get better clarity. See, at this blue color line, strongly rejecting the prices. Prices exactly reaching the blue color or a little below the blue color, they were coming down. Why? Because there is a 1 minute strong institutional order flow area is there. We have a rally base drop. Let me draw wick to wick, you get even better clarity. See here, this is a rally candle with pro gap, this is a rally candle. You have two base candles and a drop candle. So in rally base drop, the highest of the lagging candle, we have drawn the zone. See, this zone just before reaching the prices, strong rejection. That means this could be a very strong high liquidity area, maybe. We have price action close rejections. That means strong, may not be high liquidity zone, or maybe it is having a strong institutional order flow, not letting the prices go above. If that is the case, we never reach our 5 minutes target. So that is the reason why instead of looking for this 5 minute zone, you can aim for this 1 minute zone. Because after reaching, definitely a push will be there. The push will give you at least up to this area. If it is a high liquidity area, probably it will prevent the prices to reach. Either at this blue color line you can exit, or you can exit at this 1 minute type 1 proximal entry, or you can exit at 1 minute type 2 proximal. Either way. Anyway, till prices reach till 1 minute type 2 proximal level, I am recording. This is the maximum opportunity our software has given. But where you want to exit, it is up to depending on you. But up to 1 minute type 2 proximal entry, we have 1:5 RR is there. See, 1:2 from this entry, and we got it's excellent. Still, if you have fears, you don't want to go up to type 2 proximal, then you adjust up to. Still, you are getting 1:4.7 RR. You are getting. Still, you are not believing it will reach because a lot of rejections are there from this blue color area. Maybe you want to target up to here only. Still, you are achieving 1:4.5 RR. So you are getting a very good RR. So that means we should not miss this trade. Whether you exit in this blue color line, or whether you exit at the type 2 proximal, or you exit at type 1 proximal, or you exit at type 2 proximal, it is up to you. Strictly speaking, this zone is pierced and sharply it came down. But you can't expect this, right? Either you have to exit at the blue color line, or at the type 1 proximal one of this zone, or type 2 proximal of this zone. Up to type 2 proximal, it has given 1:5.25 RR. So that's why it's a very good trade. RR point of view, it's a very good trade. But ROI point of view, it didn't meet our requirement. So from this entry, 5 minutes, a fine-tuned 5 minute zone, until this 1 minute type 2 proximal, it has given a profit 3,780 rupees. And it is a 2.3% ROI, return on the investment. But one point you have to observe. Do you know how much time it took to complete the trade? See, this is the candle. 13:39 candle, you got the entry. 13:59 candle. That is almost 2 o'clock. This is a 2 o'clock, afternoon 2 o'clock candle. And 2 o'clock 1 minute candle. Your entire trade is finished in just 3 minutes. In 3 minutes, you got a profit 3,780 rupees profit, which is a 2.3% return on the investment as per one futures margin cost. Just 3 minutes. In 3 minutes, this is a very good ROI. This is an extraordinary ROI, 2.3% ROI. Generally, to achieve 6% ROI, we should wait 1 hour to 1.5 hours at least. Time it will take. But 2.3% ROI, we got in just 3 minutes. If not 2.3, you would have got at least 2% ROI if you would have exited at this blue color line. If not 3,780, at least you would have got around 3,000 rupees profit you would have got if you would have exited at this blue color line. Because initial rejection started. Generally next time it will go a little above that. But why these rejections before touching the prices, our actual order flow? This is a strong order flow. That's why there is a very big push. Because supply is very strong, now again demand is weakened and further it came down. See, after that what institutions has done? To violate this zone, they created a drop-based drop and then they violated this zone. Finally, this zone is violated. Next, we are waiting for another order. Let me go to 5 minutes. Another trade in these zones. But unfortunately, prices didn't fall. They did not fall much. Only this fine-tuned zone is created. And again, institutions created a new drop-based rally. And again, they pushed in. This is, price action is during last half an hour of trading session. So this is at 2 o'clock 15 minutes. Finally, this leg out is at 3 o'clock 5 minutes. So last minute of the trading, first of all, this itself is a high risky trades because we are trading almost near closing hours of the market. But many times we have seen at 2 o'clock, 2:30 between, we got very good trades. And trades are completed in just 30 minutes or 35 minutes time period. Today it's completed in 3 minutes. That is a different story. But many times during between 2 o'clock and 3 o'clock, we got very good trades earlier also. And today is also one such kind of trade and we achieved 1:5 RR, a maximum. At least you would have got till the blue color line. If you would have exited 1:4.5 RR, you might have achieved. That's why I'm saying this is a very good trade. But only thing is, aiming this 5 minutes zone, the rally based drop, you would have missed this trade. If that is the case, probably this was the last opportunity at 14:30 to exit the trade at the blue color line. Because prices traveled within this area only. But how much of your time would have been wasted? From 2 o'clock to, this is 2 o'clock 30 minutes time you might have wasted before you exited this blue color line. But if you would have exited here, in 3 minutes your trade is finished. Why we have to exit here? Because this price action clue. It is saying this 1 minute zone is having a very strong liquidity. So our prices may not reach up to this 5 minute zone. So that's why observing the price action is very, very important, especially when you plan your trades at the last hour of the market. So you have to take quick decisions. Anyway, these are all experience. You will be learning. Slowly you will get. That way you will read the prices in much better way on the charts. What is price action? Understanding the behavior of the prices on the charts. That behavior you should properly calculate. Then you get the maximum profits in the stock market. Okay, and the last one is India Mart. India Mart is a high liquidity supply zone, daily supply zone. So almost 1 year back this zone was created. We have a drop, 2 base candles and a drop. There was a fine-tuned 75. Within 75 there is no proper fine-tuned 5 minute zone. 15 minute zone. Only until 75 fine-tuned zone is available. We have a drop based drop. Earlier the price structure is not good. There is no 75 minute zone. Drop based drop is there. And within this drop based drop there is no proper fine-tuned structure. See here, the structure is not at all good. We have a rally candle and then drop candle. In between, no base candles. Earlier, lot of base candles are there, but that is not a convenient structure. See, this is the reason why this zone is already pierced earlier. It looks like it has given a test. There could be other reasons behind this, but see, earlier it was already pierced once. So this zone is pierced. We have a rally candle, drop candle, no base candles. So this is the reason why we didn't plan any trade, even though prices also did not enter into this zone today. There are two possibilities. Either this entire zone has to be violated, or institutions may create a new dynamic zones. Next time we get the trade opportunities. So this is about the high liquidity zones identified from our yesterday's end of the day report. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.